Of Microsoft now fractionally in the red, despite initially moving higher after the company's earnings report beat estimates. Let's bring in Gil Luria of D.A. Davidson. He's got a buy rating, $415 price target. Gil, we're not far from there. As I look through these numbers on the different business lines, they beat in productivity and business process, intelligent cloud, and more personal computing. But it's interesting. They mostly beat in the cloud areas. What does this say about Microsoft's operational prowess, especially given what we heard from AMD and from Intel about data center and about PC demand?
Well, they're executing extraordinarily well. As you pointed out, they beat on every single line and justified very high expectations, considering, as you've been pointing out, they're up 24% just this quarter. Expectations have gone very high. They were able to execute and meet those. And in terms of what AMD and Intel said, let's not forget that all the oxygen in the room in the data center is being sucked up by GPUs right now. Microsoft is probably spending $2 billion a quarter on GPUs. That doesn't leave a lot of room for buying whatever it is AMD and Intel are selling these days. So I would look more at what Microsoft reported and what Google Cloud just reported, an acceleration in their cloud business, as pretty good signs. We'll wait to see what AWS says. If AWS is reporting anything more than 12% growth, that's very good news for the software space.
Yeah, the bar is kind of set, I suppose. Now, if I were worried about something with Microsoft, I guess it would be margins, right? Given that they just got done with this acquisition of Activision Blizzard. But right out the gate, they cut almost 2,000 workers there, and they're delivering these margins. What do you need to hear on the call to remain confident that they're keeping an eye on the bottom line?
Well, that's what they've been communicating, and we need to hear that again. They've been communicating that they can still improve margins, even from these high levels. And if we continue to hear that, if we continue to hear that they think they can keep this Azure growth growing at 28 to 30%, I think the stock keeps going up from here. I think the stock is pausing right now to wait for guidance. If that's what we hear from guidance, more cloud acceleration, more margin expansion, stock should be even up more.
How should we think about the opportunities in gaming? And of course, the intersection of that with everything else that Microsoft's involved in, including all of its applications and rollout of AI. This was the first quarter where you did see Activision Blizzard folded into the results. How does that propel Microsoft from that side as well?
So the bad news is it took Microsoft 2 years to close the Activision deal because of regulatory scrutiny. The good news is it allowed them to plan the integration, and they were able to get the costs out, as you pointed out, right away. They're integrating the revenue. There's some revenue dis-synergies in the short term. Those didn't seem to impact results very much. Longer term, there will be the revenue synergies as they really are able to expand within cloud gaming specifically, which is what's really important for them right here.